Hello everyone, welcome to the IchimokuCharts.com daily analysis for the SP 500 for Monday, July the 6th. Well, a much smaller bodied candle for today's trading. A green candle, which means that the bulls have made some net gain on the day, but a very small body at the end, or what could be the end, of a first time frame downtrend. We still have a lower high and a lower low, which means that the trend is down. It's a continuation of the trend that started the previous day, but certainly not a bearish candle. Now this candle is a Japanese candlestick reversal pattern, or potential reversal pattern. It's a what we call a hammer, and that's where we have a small body at the end of a first time frame downtrend and a longer shadow on the bottom of the body, and it's like shaped like a hammer, where that's the head of the hammer and there's the handle part of the hammer down below. And the expression is that the market is hammering out a bottom. Now the only thing is that we have a very short time span to this downtrend, so it probably negates some of the potential intensity to the upside for this reversal pattern. Now with all of these Japanese candlestick reversal patterns, we need confirmation of them before we can say that we've had the reversal. So we still have a first time frame downtrend. So what we need is for the high of the current candle to be taken out for there to be confirmation of this pattern. Now previously we identified that we had a complex head and shoulders pattern. Here we had the left shoulder, a complex left shoulder, the head, and a right shoulder. And we wanted to see a strong close down below the neckline. We have that line between the shoulders and the head, and that's called the neckline. We haven't had a close down below there yet. So for this pattern to be complete, we want to see the market trade down below there fairly substantially with a fairly strong close down below. Now if we look at our Ichimoku indicators, the cloud is the feature that dominates the chart, and we can see that the cloud has held as support, and that's evidenced by the shadow on the bottom. The market tried to trade down into the cloud, and the top of the cloud here is held as support. The buyers have come in and brought the market back up. Now the buyers weren't strong enough to change the trend in the first time frame, but they were strong enough to close the market up at the highs, which means that the bulls have closed the market in control. The bears have lost all of their commitment that they had previously, and the bulls are showing some sort of commitment at the moment. Looking at the other indicators, we're trading down below the Tenkan-sen and the Kijun-sen, which means that the market is medium-term bearish, but we're still just trading up above the cloud, which means that the market has a positive fire. So we're getting some sort of mixed signals at the moment. Now, as identified previously, if we do trend up, we have this well-defined zone of resistance, and the market has tested this zone on quite a few occasions and sold off. So if we do have a new first time frame uptrend, we need to be aware that the upside potential is limited to the resistance here. If we do continue to sell off, then we have support anywhere down through this cloud, and fairly strong potential support at the previous swing lows of the previous descending triangle. So a market that is still bound within the range that we defined, and we need to look at how the market will react if it trades down below the cloud or the Kumo, or if we have a nice solid close up above the zone of resistance. But that any of those scenarios might be a fair way off.